Welcome to video number 4 of the How to Read Your Insurance Policy video series. In videos 1 through 3, we covered things all on the declaration page or pages of your policy, like reading who the named insured is, who the insurance carrier is, what the effective and expiration date of the policy are, where to find the policy number. We also went over Section 1, which is coverage for your belongings and your property, your home, other structures, contents. Then we went over Section 2, which covers things like protection for lawsuits or cost of lawsuits against you for negligent acts. So that's liability insurance, also known as casualty insurance, and also coverage for medical payments to others. And now in episode 4, we're going to go over deductibles. So you have covered losses. We'll talk about in a future video how to find out what loss types are covered. But anytime there is a loss for property, typically, not always liability, there's going to be a deductible that applies. So in your declaration page, you're likely going to see deductible, and the loss types or underneath it, somewhere around it, it's going to say all perils or all other perils or base deductible. That deductible is for a standard loss, a fire, water damage, something to that effect, a normal loss on a home. Then you also have potentially, and this is not on every policy, you may have separate deductibles for specific events. What's a specific event? It could be something like a wind loss. So you have a big storm. It's not a hurricane. It's not a tropical storm, but it is going to cause damage to the home. And so you may have a wind deductible because wind losses can lead to catastrophic damage. The deductible might be higher. So instead of, like on the screen, what we're showing, you have a $2,000 deductible, you may have a 1% or 2% deductible for a wind loss. Typically, it's also going to be something that would apply to a hurricane or a named storm, or those two types of losses, hurricanes or named storms, may actually be excluded by the policy. So it's not only important to understand the difference between just wind standard losses and then also named storm losses and hurricane losses, it's also important to understand that some of them may not be covered. So because you hear wind loss, don't assume there's not also an exclusion that says if it's wind damage from a named storm, it's not actually covered. So that's extremely important to just get straight. Is you have your deductible for average losses, normal common losses, and then you have your deductible for catastrophic losses. If you live in California, you may well have an earthquake deductible in place. Sometimes that could be as high as 10 or 15%, maybe even more, or as low as 5%. But we're talking about 5% of the dwelling limit of your home. So if you have a $1 million home, that's a big chunk of change that you're paying out before anything is being covered. And the same applies for percentage deductibles for wind, named storms, or hurricanes. They're often written on a percentage basis, sometimes just a straight dollar amount, but oftentimes you'll see something like 1%, 2%, 5%, 10%, and those are percentages not of the loss amount, unless it says that, which I've never seen before. It's going to be a percentage of the dwelling limit. So again, if the home's $500,000 or $1 million, it's 1% of that you're paying out before the insurance carrier is going to pay out on a claim. So very important to note all of this. It's also important to understand that typically the higher a deductible, the cheaper the policy is going to become. So a $1,000 deductible will lead to a cheaper policy than a $500 deductible. A $5,000 deductible will make the policy cheaper than a $2,500 deductible, but it's not always by leaps and bounds. So sometimes paying it for a $10,000 deductible, the savings won't justify increasing from the lower deductible. So that's something you can work with a broker like us to figure out what makes the most sense. All carriers handle that differently, but it's worth noting that does factor into the premium. You're not going to typically have losses where you don't have a deductible that applies, but there may be a few listed on the policy as additional coverages where you don't have to worry about paying the deductible. Now in episode 5, we're going to go over discounts. So how is the premium factored? What discounts can apply? And then also what are additional coverages and are they going to be shown on a declarations page? Thank you very much for stopping by. I am Hayden Kopser. I am the co-founder and president of a boutique risk advisory and insurance brokerage called North Improvement LLC. We're also the producer of these videos, not so coincidentally. And if you want to reach out to me directly, if I'm not answering all your questions in this or the other videos, give me a call, email me, text me, call or text at 212-495-9172. Email is Hayden, Hayden, @northimprovement.com. We look forward to having you back for video number 5. Again, we're going to go over discounts and also additional coverages. Thank you very much for stopping by. I look forward to having you back.